We are looking forward now how digital bank is different from a conventional bank in terms of the channel. And we did before a video which is more of a customer segment, how digital banks are different. And today is the second one, which is we are talking about channels. So before I should go into the digital channels or how digital banks are using channels, I want to draw your attention towards that how overall uh, this channel works. If you see that any company or the bank, when doing channels, actually providing the seamless experience for their own customer as an end user. Now, bank is using kind of 95% direct connectivity between the banks and end user customers. This is a unique in the way that because of regulations, mostly in this area of financial industry, it is very much required that banks has to take a responsibility and accountability on a financial services they are providing it to their end user customers. Whereas if you look into the other areas where there is a partners are there and channel partners are working in between the company and the end user, like you can see the Nestle or the PepsiCo, they are not having their own stores, but they are using the large stores like Costco and others where they are putting up their products. These stores are actually the channel partners of these companies. So these are the channel partners are providing the services to the end user, whereas the PepsiCo or Nestle, they are providing all supply chain. And to the extent, in fact, the PepsiCo is having their own trucks where they supply to the various stores all the products. Whereas the bank, all the branches owned by banks, and they run by themselves. So there is no channel partners in it to do the banking job. So that is a basic difference between the banking and other areas. We have to take a view that how in the last 30 years this channels has emerged. Now, if you see the banks are with the 200 years, 300 years, even some are 50 years old bank, they are having from the day one their branch banking, whether used to be manual, say 70, 80 years back, or they are automated in the 80s and 90s. So they were having all the branch banking, and the branch banking was the face of the bank to the end user customers. So if you see really that automation has happened in this branch banking from 1990 to I can say 2005, that is the period of somewhere around 15 years where banks did the significant automation into the branch banking. Now, when we come to the channel area, the first thing which bank has started was multi-channel. So they have gone one by one, like they have started like internet banking first, then they have gone to the mobile banking, then they have gone to the phone banking, then they have gone to the other channels like web channels. They have gone to the marketplace and stores. So what happened is in the passage of some 10 years, these banks has came up with the various channels, and all channels was working with the customer one to one. So the customer was not having a one experience across various channels. They were having a very different experience in the internet, very different experience in a mobile banking, different experience into the phone banking, different experience in web or stores. So all channels were simultaneously one by one working with the end user. So when we come to the omni-channel, omni-channel is all about that we have to give a one experience to the customer where seamlessly the same information and the same services and the same view should come from an internet banking, from a mobile banking, from a this web store or phone banking. Everything is coming seamlessly and kind of similar UX or similar customer experience and design as a omni-channel. So omni-channel is usually you can see some of the enterprise solutions are also available, and some of the bank has used it to put in a front of the system. So there are a lot of back office few systems working behind, and actually they put the omni-channel solution in the front to give the same experience for each channel. Now, when we are going to, so this is something that 2015 to 2022 means that since the till the last year, omni-channel is happening. And most of the bank, I can see 70-80% is already gone through with the omni-channel. Multi-channel is still, there are some 20% banks are having the multi-channels, and they are looking forward in the next few years, they can be able to move from multi-channel to the omni-channel. Open banking is a new phenomena, which is coming as a multi-bank channel. So it is kind of a solution which is PSP and open banking, and mostly in the Europe and UK. So this open banking is all about that they have a regulation where customer can allow some fintech or some other company to be able to get the data of customer from the bank and do some consolidation. So like if he have an account with the 3 banks and he want to see the bank statement which is consolidated among the 3 banks, he can be able to see it by someone as a fintech company consolidating for them. Or even though if he is having a multiple accounts, so he can be able to transfer the money so easily without any fee to the multiple banks, and he can be able to have a view, one view in it. So open banking is now continue, and that will take some time to mature. And still in Europe, some large banks are resisting, in fact, because passing the data is always a challenge, because cost of getting the customer is very high. So if someone else can take the data, chances are that my customer can move the account as well. So as the acquisition cost is still high, these large banks are saying that we have invested billions and billions of dollars to acquire the customer. It is a right way to basically, we have to go through the open banking and share our customer data with others. So in Europe, in some countries, it is very much there, but in many others, it is not the case. We should see how many channels banks are using it today. And then we will see how normal conventional bank is using channel and how these digital banks are using the channel. So first is the branch banking. So branch banking is significantly changed in the last 15 to 20 years. So it is not anymore manual. It is not anymore just providing the service at a branch as a branch services, but also having the ATM, having a cash deposit machine, having a check deposit machine, having a kiosk in the branch. So they are having a number of automations into the branch, and the size of the branch slowly and gradually is shrinking. So if the 60 people was working in a very large branch, now around 30 or 20 or 10 people are working in the branch. Now they came up thereafter with the smart branch as well. So a smart branch means that there are only 2 to 3 people in the branch, where one is a teller, one is a salesperson, and one is basically looking into the operation area. And that's how with the 2 to 3 people, they can run a very small branch where all machines are providing the more services rather than human beings. So it is all about, as I said, ATM, CTM, check deposit machine, and kiosk for the internet banking as well. Even though now people less branch as well. So there is no guy working in the branch. These are all the machines which provided to the customers as a branch to take the banking services. If you see, the branch working hours is only morning to evening. At a late evening or at a night time, the people are not working. However, the branch is open, and a branch is open for the people who want to withdraw the money from the ATM. They want to deposit the cash. They want to deposit the check. So branches are working still in off time as well. Now coming to the second one, which is more of a web and internet banking. So if you really see 15 years back or 20 years back, the banks started coming with the internet banking, the internet banking. So internet banking is all about 7 into 24 kind of services, where most of the products are there. You can open an account through the internet banking. You can keep the account. You can transfer the money within the accounts. You can transfer the money from one bank to another bank. You can see your statements. You can download your statements as well. So huge number of functionality is using. Now I move into that, what is the bank using the channels and how now it is translated to the digital bank. So the digital bank is very, very different now as compared to the channels, because almost all the channels which banks are offering, digital bank can do that, but as they don't have the branch presence, they have to do things very differently. So if you banks, you are seeing already I discussed saying that credit card gateway. So some are issuers or acquirer are joining the gateway, and so this is normal. Bank do that as well. In fact, they allow some of the fintech companies, banks, to give a sub bin as well to them on their own gateway they are linked to. Swift already I already said that cross-country payment ATM gateway, they join the ATM gateway of the country, so that every ATM, whether pertaining to the one bank or not, you can be able to do the transaction. PayPal, Payoneer, Paytm, all are basically banks are creating a relationship with them and using them for the payment, or people can be able to do the payments through these channels. I told you the journey of the call center, that moving to the more automation and robo process automation and AI. Sales lead, there are a number of companies now, fintech available in the market, which they acquire the customer sale and create the lead for the banks. So if the bank has joined these fintech companies, they are getting those leads from those companies. Country clearing gateway, another area where banks are linked to the country gateway. It is all about if there is a check, and check has to be clear from the clearing house from one bank to another bank, and that's how this clearing gateway comes into. Credit management body. So lot of credit card scoring. Everybody knows the credit score, and so there are third parties which are providing now the credit report. So if you are giving a loan to someone, or somebody is taking the mortgage or the car loan, these companies provides the person's detailed credit to the bank, because it is across the bank. So maybe person has taken the loan from a bank, and the B bank is he has gone and trying to get another loan. So these credit houses or bodies are having all this information together, and they can provide this to the banks. Reward management, and mainly for a various product like use of the credit card, spending of the credit card, and some of the products they are offering as well. So if you are using some of the product, they are also providing the reward. Now coming to the digital bank. Now first thing is, in a digital bank, where they are different, that they have to they don't have the SWIFT mechanism. So cross country, they have to use some mechanism to do the cross country. So some of the banks like N26 or Revolut, or which are in a multi-country in Europe. So what they do is they do netting. Netting means that they are having an account in two countries, suppose that. So if money is coming from going from A country to the B country, the money coming from a B country to the A country. So at that time, they keep squaring it. So it is not that every transaction is happening independently like a SWIFT. It is happening in the country, and they see how much balance they are keeping into the A country and the B country. And if B country is having a less balance, they transfer 10 from A to B. Otherwise, the whole day it is ping pong between the A country to the B country. And this is a huge benefit to them, that one is a very fast transaction payment. Second is managing the cross-country payments. Third is how they can manage their FX charges, means currency conversion charges. So from A country, the currency is different, and a B country is different. How they can be able to use this netting. Also, they are using in a payment like PayPal, Paytm, and many countries are having multiple kind of payment system. Like Malaysia has a big payment, Big Pay, and Big Pay is basically cross-country payment. So if a digital bank is coming, they can use the Big Pay to do the cross-country. So this kind of channel partners. So any digital bank can have a channel partner to be able to transfer the money. Now, as they don't have the branches, they go for a cash deposit partner and cash withdrawal partner. So if you can see N26 in Germany, they signed with the large network of stores. And when you go to the stores, you can deposit the money over there in N26, and the same as you can withdraw the money from there as well. And the same as you can see that this Sterling Bank came up with a solution with the post office. So the post office, they collaborated with the post office, and cash deposit and cash withdrawal, anybody can be able to do on these post offices. Same as in India, this Singapore bank, DBX, created the partnership with some of the companies where you can be able to deposit and withdraw the cash, but also you can be able to open the account over there as well. Like you can go over there, fill the form, and you can be able to open an account. Now, startup partners onboarding, that is, as I said, in India, DBX is doing it. There are a number of banks, digital bank, are looking forward the partners for the onboarding. So onboarding is digital. So if the person is coming to the bank and opening an account, it is not that difficult. These people can be able to even update in an app or through internet, and they have to come to the branch only to put their ID properly verified, and also they have to submit some of the document to do the KYC. But when we are going to the digital bank, there is no branch. What only they can be able to do is that they can find some partners to do the onboarding. So they can maybe get some big stores where they can sign the agreement with them to do the onboarding from there, and they can be able to submit the document and do the onboarding. Many countries, the KYC is very critical, and they have a regulation where digital bank has to follow. Now, and one thing more which is very different than the bank is a cloud computing. Now, banks usually not gone 100% to the cloud. They are having, even though if they are having a cloud, it is a more of a hybrid model. So hybrid model, in a certain application, they have gone to the cloud, private or public, and mainly the score system is in the bank. So why it is? Because most of the country, the regulations are such that you have to keep the data within the country. So keeping the data within the country and keeping the data with you, because you are the owner, you are accountable for the data. For any breach of the data, any security issue of the data, bank is responsible, even though they are using the cloud as well. So what happens is, to reduce the cost, usually the digital banks goes for the cloud computing, where they are using some of the application which are third parties application or third party core banking solutions. That's how the digital bank is different than the normal bank. Now, credit card issuer, digital bank, this is a major product for them, because when they are going into the product like personal account or the saving account or the current account or the business account, they are also issuing the credit card and the debit card. So most of these digital banks are credit card issuers, and I have not seen that any is doing the acquiring job. Mostly are in a issuer space. Reward management, there is a number of rewards are coming in from the their card, their spending, their personal account, because there is no interest in a personal account, and sometimes they offer the reward to them. Even the current account, already interest is there, but in a certain condition, if somebody is having a large amount in the account, probably they can give some rewards to them. And so reward management is usually they use the third party. Even the bank is also using third party, because if a reward is all about giving a TV to the person or giving a small, so people can select, they are having a points over there, and they can go to the website and select, and against the points they can take anything. But who is doing all the supply chain is the third party, not the bank. Even digital bank is also not doing this. It is a third party game. Now coming into the PSD2 open banking, in Europe, UK, most of the banks are digital banks are there. Uh, so PSD2 is very much there, where the regulation says that the customer can be able to authorize some third party to take your data, and that is, from a customer perspective, is definitely a good thing, because if I have a account with the three banks and I can get the consolidated statement of three banks in a one, it is much better for me to understand the overall my financials, rather than I'm having in a different timing a three different statement. Even the consolidated statement is a key as well, within the one bank. So digital banks uh, usually gives the consolidated statements to their customer, because they are having a less number of products, whereas the bank is having a significant number of the products. And if the customer is having accounts, multiple accounts, it's very difficult to give the consolidated statement to them. Like some of the people are having in a normal conventional bank, suppose that a 50 deposit, this time deposit account means that fixed deposit, 3 months, 6 months, 1 year. So when they are going on a consolidated statement, if supposed to be printed in 50 accounts balances, plus they have a thousands of transaction into the normal current saving account, and so it is not only the consumer, but the bank is doing the wholesale banking for the companies as well, and the companies are doing on a daily basis hundreds and thousands of the transaction. So the consolidated statement is really a challenge, and normally for wholesale banks and SMEs, the banks are issuing the statement on a daily basis or weekly basis, depending on the customer what they are asking, and normally it is going through the online. So they encrypt the statement, they send it to them. Some is having a hard line. So if it is a large customer, in case of say Standard Chartered Bank, suppose that we have with the Shell, and we are sending daily statement for the Shell through a specific format. So what they do is, as it is in a specific format, they can be able to load it into their ERP solution immediately. Now coming into the AI and SMS based, this scoring model based credit scoring. Social media data to be used for the credit scoring is a new phenomena, and AI helps into it, that how you can be able to judge a person that he is a nice guy to return their loan, rather than the old way where we are seeing that how much loan he has taken, and as per his salary whether he can be able to return the loan or not. And that is an old mechanism, but now we are coming up with a hybrid model. So hybrid model is all about taking the new way, which is social media information, utility companies data, and then doing the scoring of a customer, and using the old way of credit scoring and combining on a weightage basis. So it can be 50-50%, it can be 30-70%. It depends on the bank that how much they want to take the risk and how it is moving in an individual bank. So today we looked into the channels, that how digital banks are using the channels, and normal conventional bank has a huge advantage on banking. And let me tell you that although the number of branches is banks are reducing, like if some bank is having a 2,000 branches, they are slowly reducing the number of branches, because they have, on other side, they are increasing the digital weight or the digital channels to basically give the same service to the customer without coming to the branches. Like if you say that if we are going to the kind of automated teller, uh, will the branch tellers will reduce? It is not happen. I mean, it can happen in a 5, 10, 20%, but it is not happening in a big way that jobs are going away. So in the banks, they are focusing very much into the digital transformation as well, and coming up with this huge digital products which are different than what they were giving the product to the customer before. So we next video we will do on a product, process and service together, and that will be very interesting, where you can see basically that how conventional bank is moving towards the digital product side, and also digital banks are coming up a very innovative way of digital products. So that's would be probably very interesting, that when we are seeing product and process, which is more of an automated process, digital bank has no liberty to do is any kind of human intervention, because that is pretty costly to them. So digital bank has to have a very almost 99.9% automated process, and to do that they have to use some of the very tools which are heavily worked, and in fact sometimes you have to put your product in a way where you can see the process should be less, or with the less processing automation you can be able to provide this product to the customer. Third is the service is very important for the digital bank, because as they don't have the branches, as the customer cannot be able to go for complaints, customer cannot be able to really call to the people or go to the branch. So digital bank, the customer experience is very important on a first state. So usually the digital banks come with the slow basis putting the products. So if you take the Sterling Bank, one of the case which is one of the profitable bank, like digital bank, let me tell you that out of 250 banks, only 10 banks are in a profit. And Sterling Bank is one of them. It is a UK-based bank, and now it is moving to the Asia. I'm not aware about which country they are coming in, but they have announced to come into the Asia. And this bank has came up with the slowly and gradually the product. So in the last 10 years, they came up with the one product by second product, third product, fourth product. And why it's slow? Because they want to not lose the customer experience. They want to give the product, process and service in a way the customer should get the very seamless experience. So thank you very much. If you like the video, please subscribe me and put the bell icon so that you can be able to get my all the videos. Thank you very much.